Hi, I'm Nancy Cavey, National ERISA and Individual Disability Attorney. Welcome to Winning Isn't Easy. Before we get started, I've got to give you a legal disclaimer. This podcast is not legal advice. The Florida Bar Association says I've got to say this, so I've said it. Nothing prevents me from giving you easy to understand overview of the disability insurance world, the games that carriers play, and what you need to know to get the disability benefits you deserve. So off we go. Today I'm going to talk about what disability insurance riders you should have to enhance your disability insurance, the myths that you probably believe about disability insurance agents, and the truth. What every long-term disability policyholder has to know about exclusions in their disability insurance policy. We're going to take a quick break, but when we return, we'll get started. Stay tuned.
Have you been robbed of your peace of mind from your disability insurance carrier? You owe it to yourself to get a copy of Robbed of Your Peace of Mind, which provides you with everything you need to know about the long-term disability claim process. Request your free copy of the book at caveylaw.com today.
Welcome back. Ready to get started? Let's talk about what insurance riders you should have to enhance your disability insurance policy. Look, there are three ways that you can purchase your disability policy. First, your employer may offer you a disability insurance policy. Your employer is the sponsor. You're the beneficiary. Rarely do employer-provided plans or policies offer you the opportunity to upgrade your benefits. The insurance word for upgrades are called riders. Now, if you have an employer-sponsored disability plan or policy, one possible rider is the opportunity to increase your benefits from 50 to 60% or even to 66% of your earnings at the time you became disabled. I suggest that you take the highest benefit possible. And I know that HR is not going to tell you that your disability benefits are going to be reduced by Social Security benefits that you or your family are eligible for. So you want to get the highest amount of disability benefits you can, knowing that there are going to be deductions and reductions that will reduce the amount of your net benefits. Now, another way to get disability insurance is through a professional association like the American Dental Association, the American Medical Association, the Florida Bar, or other professional associations that are related to your occupation. There are some pros and cons to purchasing policies from that type of an organization, but they're more flexible about riders than ERISA-based policies. And the third way, and the preferable way in my opinion, is to buy your own disability insurance policy through an independent agent, because there you can actually begin to customize a disability insurance policy that meets your financial needs. Now, that type of policy will provide you with a greater financial peace of mind, but it's going to cost you. And part of the trade-off is going to be whether or not adding these riders are possible, and if so, what riders, if any, are worth the extra cost. So I specifically am going to talk about residual disability, inflation protection, future purchase options, catastrophic disability, and retirement benefits. There's no doubt that disability insurance is expensive, but adding riders to the disability policy can be money well spent based on your specific personal situation. Now, an agent may offer you a smorgasbord of rider options. HR may offer you a smorgasbord of rider options, but not all these options are created equal. So let's learn more. I want to first talk about what riders you should pass on and why. The first is the inflation protection. That indexes your benefits to inflation and is normally based on the CPI index. I think it's a waste of money in view of the state of the American economy. Now, the next is retirement benefit, and that requires the insurance company to put some money into some type of retirement investment in addition to paying your monthly disability benefits. Since these are insurance products and not typically retirement investment benefits, I'd pass on lining the pockets of the insurance company. A better option would be for you to take a higher monthly benefit and then use it to invest as you see fit to meet your retirement needs. What rider is a maybe? Well, there's the catastrophic disability benefit. That's going to pay for care if you're unable to do 2 or more activities of daily living as a result of disability. The rider might be an option if you have a family history of disease like multiple sclerosis, Parkinson's, autoimmune disorders, or dementia. Now, purchasing that rider can be a tough call, and it might be wiser, again, to simply purchase a larger primary benefit. What riders would you be a fool not to purchase? One is the future purchase option. That allows you to increase your benefit amount at a later date without having to undergo an updated physical or deal with a pre-existing condition clause. This allows you to increase your benefits as your income increases with minimal hassle. I think one of the most important rider options that everyone should have is the residual disability option. And that's particularly true if you are a professional. Residual disability benefits are paid on a monthly basis when you lose at least 20 to 25% of your monthly income as a result of your disability. The amount of the residual payment is generally based on a percentage of your loss, and it's calculated monthly. And this formula will vary from carrier to carrier, so there's no uniform residual disability calculation. Residual disability benefits can allow you to continue to practice until you decide to retire or you can't work. Now, if your monthly income loss is between 75 to 80%, you can be paid residual benefits as if you were totally disabled and still work. In other words, you can earn 20 to 25% of your before monthly income and collect the full amount of your total disability benefits. That residual disability rider gives you control over your ability to work, how long you work, and the kind of hours that you can work. In other words, it gives you some control. Otherwise, you're going to find yourself in an all or nothing total disability situation. This will give you options, but beware. There are policy provisions that say you have to be disabled, totally disabled, for a period of time before you can collect residual disability benefits. In my experience, that's backwards. Most of my clients, particularly professional clients, want to continue working and they don't want to stop until they have to. So they're residually disabled before they're totally disabled, not totally disabled and then residually disabled. So that's an important fact that you need to know if you're going to purchase this rider, and make sure that you're discussing it with your agent. So do yourself a big favor. I think you owe it to yourself and your family to purchase an individual disability policy from an independent agent, and then have the proposed policies and riders reviewed by an attorney such as myself. Yeah, I know that you're probably going to pay more for a tailored personal protection policy that you can count on. But I don't think you should make a mistake that would rob you of your peace of mind and financial security by blowing this off and saying, I can't afford it. There are some things that you need to afford and should be able to afford. Call me if you have any questions about buying a disability insurance policy, increasing coverage, or applying for your benefits. In this next segment, I'm going to do some myth busting about policies and agents. Stay tuned.